We are back with Christopher Cook from Alliance Insurance. He's answering all of your questions. You can keep texting them to us at 336-379-5775. So before the break, he taught us all that you do not pay more in insurance for a red car. But we are curious, what types of cars do you pay more for?
Yeah, cars that I could I'm going to oversimplify it a little bit. Cars that go fast because their accidents are more severe. Cars that are built to go off road, 4x4, because they tend to be in more accidents because they do go off road and things of that nature. And cars that are expensive. I think I gave you the example of a Tesla. Teslas are safe cars, but heaven forbid they're in an accident. They're very difficult to repair in the current car repair world. There's not as many of them out there, haven't been traditionally. So if it's expensive to repair, if it's going to have a bad accident because it can go really fast, if it frequently goes off road, so think 4x4 vehicles, and then I guess anything that has a high vandalism or theft rate typically has a little higher insurance premium.
I have a feeling if you're driving a Tesla, you're not sweating your insurance bill too much, but.
I've been amazed at that sometimes. I think that to myself often. Hold on, you can afford to buy the car, but you can't afford the insurance. However, those folks they work hard to save their money and they watch their pennies so that they can afford the nice things in life, I guess.
Hey, so a lot of us are not someone who can afford the nicest of the nice cars, but if we hit one, do we have enough insurance?
Hey, that's a great question. It's something that concerns me a lot. In our state, and this is an issue that the state legislature needs to take up, but in our state, every driver, every vehicle is required to have liability limits of $30,000, $60,000, and $25,000. I'm going to focus on that $25,000 number. The $25,000 is you have to have enough insurance to pay for $25,000 of property damage. It doesn't take a real nice car to be valued at $25,000 any longer. If you hit a new F-150, you don't have enough coverage. If you hit a new Honda Accord, you don't have enough coverage. There's very few cars, new ones especially, that cost less than $25,000. So quite probably, if you're driving and you want the cheapest thing out there, then you have the least amount of liability insurance. You do not have enough coverage if you have an accident.
So what happens?
Well, my granny used to tell me you can't get blood out of a turnip, but you're going to get sued, and folks are going to have a judgment against you until you've repaid them. They will file what's called an underinsured motorist claim if they have bought the right policy, and hopefully they have. But you're going to be in a lawsuit, unfortunately.
Speaking of making sure you have enough coverage, someone says, my house is full of my parents' expensive antiques. What do I do to make sure they're covered?
That's really difficult. Not impossible, but it's a great question. But you need to be thorough and you need to document those antiques. So I would first recommend cataloging those items with photographs and the best way you possibly know how to get estimates of the value of those items. And then talking to your homeowner's insurance carrier about properly insuring those. You need to insure them for what's called agreed value. Because they're antiques, it would be impossible to replace them if they were to be lost. But you could insure them for a value that you felt comfortable with. Heaven forbid your home were destroyed in the fire and the items in it were destroyed as well. What would you want to be repaid if you lost those items?
Okay, the last one we have time for here. A lot of people are getting these letters about something called mortgage disability insurance. Is that something they should buy?
You should have disability insurance. You're more likely to be injured and disabled before your working years are over than you are to die prematurely. And life insurance is my absolute most important product that I work with folks on. Should it be mortgage disability insurance? I don't think we have time to go down that rabbit hole, but I would say to folks, talk to a disability insurance agent and really understand the disability insurance product. There's a high likelihood that you will miss time from work due to an illness or an injury before you get to your retirement age.
And that is like all ages of people, no matter what your health level is.
That's exactly right. 22 to 62. You're 100% right.
Well, thank you so much, sir. We always learn so much from you, and we've had him on a couple of times. There are a whole lot of lessons he has taught us over the years. You can actually find all of those up on the WFMY News 2 YouTube page. And of course, right there in the 2 Wants to Know section of WFMYnews2.com. Thanks so much for everyone who sent in questions.